you. Well, hello, everybody. As I said, a pleasure to be here. I am Melanie Windridge. I am CEO of Fusion Energy Insights and also a co-founder of Fusion X. And I'm delighted to be here today. We'll be talking about what will it take to win over institutional investors, which I think is a really important question. I'm going to briefly introduce my panelists here. At the far end, we have Charles Boakye. He's equity analyst at Jefferies. Thomas Forner, the co-founder and president of Focused Energy. Then Wolfgang Siebold, the chief financial officer and partner at Hitachi Ventures. Julian Barber, growth stage investor at Emerson Collective. And Wal van Lierop, right next to me, founding partner at Chrysalix Venture Capital. So as I said, it's an important question. How do we bring in institutional investors? As a bit of a background, Fusion X Group recently published a white paper that was entitled Funding Fusion, the State of the Market. And that defined the funding of, it found that the funding of private sector fusion to date as about 12.6 billion by the end of 2024. And over 85% of that was committed in the last 5 years. But, and this is the important bit, the estimates that in order to get to commercialization, the fusion sector will need to raise about $50 to $60 billion to get to a fusion power plant. And so that is what we were going to talk about today, because that's not going to come from VCs. So where is it going to come from? So we are going to dig into that quickly. So first of all, I want to think about why is fusion attractive to investors? So, Charles, you talked about a pragmatic energy transition. Can you explain this? And do we think that fusion has a unique window?
Yeah, thanks, Melanie. So I've been sort of following and tracking this evolution of our energy system over the last few years. And I think anyone who's been paying attention will have noticed there's a lot of discourse at the moment. Are we going too fast? Are we going too slow? Is it accelerating? Is it not? And I think everyone sort of just needs to agree on a few fundamental truths. And that is energy demand is increasing, right? Last year, I think the number was about 2.5% increase in energy demand globally. Most of that, yes, coming from advanced economies, but for the first time in a very, very long time, from developed economies. But for the first time in a long time, we're seeing increasing energy demand from developed economies, right? The third largest absolute increase was from the US. The EU returned to growth for the first time since 2017, ignoring the pandemic period. And so we're in this sort of new paradigm of increased energy demand. And day to day, all of the investors I speak to are talking about a pragmatic energy transition in light of this increased energy demand. And they're all looking for three things. And I'd say fusion is in a unique position to provide those three things today, right? The first one is availability and sort of capacity factors. Is this subject to the weather? Is this subject to some sort of other challenges within the supply chain? Or can we more or less count on this round the clock? I would say check for fusion. Is this subject to political back and forth, the whiplash that you see from sort of changing administrations and changing governments? Or actually are people interested in this from a pragmatic and practicality standpoint? Again, I would say somewhat check for fusion. And then finally, yes, electricity and electricity demand is a big part of what we're seeing in the growth of energy. But there's multiple uses of energy today, whether it's high temperature heat, whether it is industrial purposes. And investors are trying to figure out what are the other sources of energy that give me those other uses outside of electricity. And again, there, I would say check for fusion. So it's a really sort of interesting moment for fusion, given some of those conversations. It's just a case of, can we sort of capitalize on that moment now?
Thank you. Wal, did you want to chip in? What do you think makes fusion attractive to investors?
Well, they're very confused, investors. I mean, the energy market is by far the biggest market in the world, and investors are sitting in a dual position, like milk the cow or do something new. It's very interesting. Last summer, I was at a very big investor conference with about 200 top ESG investors from all over the world. And there was electronic interviewing of what they thought. And all these investors were first asked, what is currently your investment horizon? Is it 3 years? Is it 5 years? Is it 10 years? Is it 15 years? 75%, of course, 3 years. And then there were other questions, and then came the question, what do you want to invest in currently? Is it solar? Is it wind? Is it biomass? And then down the road it was, is it fusion? And to my total surprise, 75% said it's fusion. And so we then had the debate about the enormous disconnect between these two answers, as you can. But I mean, this is really what people are struggling with. I mean, I think that there are a number of components that large institutionals want to have more clarity on. It's a dog's breakfast. Fusion, what, and all these different fusion companies, and who is going to make sense of what is there? And then the other very big thing is, okay, there are people in fusion companies, but where do I find a syndicate that is going to stay there for the long run? Or can you guys tell us, gee, are there possibilities for early investors to find a exit off-ramp in the next 3, 5, 7 years? But we need much more clarity. We actually need a new narrative on investing in this stuff. I think that's very important. We need a new narrative, not based on a Silicon Valley buzz, but really based on facts. What is being produced? What are the realities of what can you achieve in the next few years?
Thank you. Well, let's dig into maybe some of the needs of investors. Julian, can you give us a VC perspective of what investors need?
Yes. Well, as one of those dumb Silicon Valley investors, I'm well equipped to answer this question. So we really look, at the venture level, there's kind of three things, right? There's, can this team build it? Right? If can this group of people build this, the hardest thing in the world that we've ever assembled? If they can build it and the team can do it, can the technology work? Can it produce economically competitive, commercially viable fusion power? And then if you can do that, if the team can build the really hard thing and the really hard thing can work and it can produce economically viable power, can the capital markets support it through? And so those are kind of the three, team, technology, and capital markets are kind of the three earliest stage things that a venture capitalist will look at. And if you can address those, you don't necessarily need to solve all of them, but if you have a good line of sight on addressing those three things, it starts to look pretty good. And I think a lot of mistakes can be made in the venture community and getting too excited about the technology or too focused on the team or not paying attention to one of those three things. Like on the team side, one of the things I've found to be one of the best indicators is like these are really complex machines. And so it takes a really special person and organization to develop the culture of interdisciplinary coordination to do this, right? That's not just like somebody throwing together a team and making it happen. Like that's a special type of person and a special team. And you can start to diligence that while you're running through some of these companies. But I think importantly too, you need to have teams that are set up for success to access this institutional capital down the road. We typically see this like trend of really technical founders working towards really great goals, but it's like you're asking someone to raise like a seed round to become like an Olympic swimmer, right? Like you're like, go train for the Olympics, go compete for gold, and then they raise their rounds, they compete for gold, they win it, they do great, they raise their Series B, awesome, and then as soon as you raise their Series B, everyone's like, okay, now you got to go play like football. And like ask them to go be like a professional basketball player or something. It's like a totally different sport. They're doing a totally different thing. Amazing like generational founders can make that pivot, but it's a really hard pivot and something that I think a lot of founders need to focus on early on in their journey so that they can transition themselves and their organization so that they can prepare for that level of institutional capital when it comes, because that we talk about it as like the folk gap or the scale gap or the financing gap. And a lot of people call it like a finance problem, like capital markets are broken or something, but the capital is always there for good projects. We just need to make sure that the teams that are coming through are well positioned to attract it.
Yeah,
I think that's a very important point. I mean, it's very difficult. You basically are saying you start as a very exciting entrepreneur, and then you have to become an engineer, and then you have to become a utility.
Yeah.
And how do you do that?
It's hard.
Yeah, it's a tough challenge. I wanted to bring in Wolfgang. You're at Hitachi Ventures, and so you have an interesting perspective because you've got a blend of the financial and the strategic. So, can you tell us your perspectives on the needs of the investors, please?
Sure, absolutely, and happy to do so. So first, I want to set clear, we are structured as a classic venture fund. We have a 10-year life cycle. We can extend for another 2 years or so. So we have to deliver financial returns. But we not just do this for the financial returns, but also because we are set up to actually rejuvenate Hitachi, which is a big conglomerate. Many of you know them. We have businesses in many industries, in the rail industry, in the energy industry, in IT, and in many other businesses. It takes probably half an hour to just describe those. In energy, we are exposed to fission. So we are one of the leading players when it comes to SMRs, but we are also a classic player in the fission industry. And Hitachi has been super active with partners like ITER or JT60, which is Japan's fusion program. And from there, effectively developed multiple capabilities in providing core technologies to those projects. And what we want to do with our venture activities is effectively to help startups to grow faster in their path to industrialization and by helping them with parts of those technologies. Of course, not all, and all those startups have great technologies, but we see interesting angles wherever we go. So we are invested, for example, in TIA Energy, a company out of Princeton, and we work with them, our business unit, and then work to effectively develop roadmaps jointly and then hopefully manufacture together.
Thank you. And so to all of you, how do the needs of institutional investors differ from the needs of VCs? Where do you think it needs to go?
I mean, obviously, VCs also consider themselves institutional investors because we typically draw from the same pools of capital. So we are also exposed to risk-return metrics that we have to fulfill. We are, of course, at some end of the spectrum. And the question is, how do we get to the other end of the spectrum? Of course, we are all in now, effectively in this end of the beginning, as we just heard it earlier, which is still kind of the technology phase. But soon there will be kind of pre-commercial projects and there will be commercial projects. And I do think what we need to help the companies to effectively set up what they do in order to satisfy the kind of risk profiles of later stage investors, especially funding sources that are maybe not equity related.
Yeah, we in venture land, so much of the early fusion industry has been started on this idea of like just optimism investing. I think someone else might have used that term today, which is true because everyone since the 60s, everyone's like super excited about fusion and for good reason. There's a huge opportunity on this other side of it. And we are truly in a moment, I think, right now where we actually have a good shot on goal at achieving this, but it's still been funded on this like optimism first mentality. It's mostly been early stage investors who are taking a lot of high risk bets. It's a very different risk reward archetype of infrastructure or a institutional investor. However, we wanted to find a later stage investor who would deploy like a check for $100 million or $1 billion. Those folks are doing a very different calculation because they're used to investing in infrastructure projects or very low risk projects. If your goal is to make $100 million, you can invest $10 million and make 10x, or you can invest $100 million and make 2x. I'm typically investing 10 million for 10x, but other folks are investing 100 million for 2x. So their 2x requires a very different like risk barrier to entry. And so my advice for fusion companies in the space is just start thinking about what those investors look like now, because this idea of fusion is a huge advantage in that you can actually leverage this hope and optimism to get a lot of capital around the table because people get excited about it. It's a rare category that gets people fired up, which is awesome. But it's also it's a advantage that you should lean on but not require, in that setting yourself up to talk the language of institutional investors or later stage investors, which is like, what's your deployment path and like how are you realistically going to hit revenue targets in year 10, 15, and 20? What does that mean? Like what kind of valuation do you have today and how does that translate to an MIC for me down the road? and how can I like helping those investors make the case for you is great. So start setting up your data rooms, start setting up your corporate model, start developing a TEA that's robust, so you can come up with a reasonable set of unit economics so that you can talk the language of those infrastructure investors.
So kind of professionalize the whole thing. Almost, yeah. Do you have a comment? Or Wal first and then Charles.
Earlier today, the question was, what will it take for a fusion company to become commercial? And the number of 2 billion was mentioned. Now that 2 billion, that will not be all VC. I mean, but the right companies should figure out that if they get a big investor in, that investor may just want to come in to ensure that they can place project financing money into many of your upcoming projects in the future. So of that 2 billion, the bulk probably is not VC. It's totally different source of capital.
Yeah, no, I totally agree. And I would almost go further and say it's not even about sort of the quantum of capital, it's about the type of capital. The risk reward point is an excellent one. There are different investors along that spectrum, but there's also different ways of financing different bits of your operation, right? Not all of it has to be equity. There are you can get loans, there's different financing structures, leasing structures, etc. Having a real sophisticated financing plan from beginning to end, and I mean out beyond 15, 20 years, is actually really important. And I think that's one thing that institutional investors want to see. They want to understand, well, what is your financing plan? Not just how much do you plan to raise, what tools are you going to pull on to actually raise that money? And importantly, what is that money being used for? Now, you don't have to get into the specifics of it's being used for this specific component or to pay for this person, but broad brushstrokes. Is this for infrastructure? Is this for manufacturing? Is this for X, Y, Z? I think there isn't a clear picture at the moment as to this sort of huge quantum of money. What specifically is it trying to solve within the fusion space? Is it R&D? Is it sort of building the plant itself? That's probably the area which probably needs a little bit more clarification, I would say.
Mm-hmm. Thank you. Thomas, you as a founder of a fusion company, what's your perspective?
I think that's pretty much to the point. So we, as a fusion company, need to know what exactly is it what you're going to deliver. So is it a whole power plant? It's not for us the case. So we are delivering what we call the fusion island. But we need partners to build it. We need but from the very beginning, what you have to deliver is first scientific readiness. So it means a really credible, peer-reviewed scientific approach that is going to work or that needs no miracles. Second is you need technology readiness. Means if you want to work with partners like utilities, other industry partners, you have to have a real clear technology roadmap. You have to have a clear risk register that you can hook off, where you can say, well, this is the risks that are still remaining and how you address them. Third is you have to have commercial readiness. So you have to have a business model. We want to build businesses, not labs. So we want to earn money, we want to make money. So it means the thing that we have to deliver is that what we have to guarantee for is what we get the money for. And this has to end up in a business plan. And all together then ends up in a plan that shows where you are. And then you can deliver. And once you are able to deliver with, which is always a matter of are you able to raise the necessary funds, then you can deliver your milestones and then you can raise more funds. So it's always a chicken egg problem, but you somehow have to solve this. And this is probably what keeps us awake. And you have to be a bit crazy if you want to do this. But I think for some people it's doable, maybe for others not. But it's a huge challenge to get there, and in the end, you can attract institutional investors and then create structures. What you just laid out. If you know what you're delivering, then you can create project financing structures for, let's say, prototype fusion power plant or FORK, which is more like financing wind parks, financing solar parks, or like SMRs are doing. And then you can answer also the exit scenario. So because once you get there, there are potential trades coming up, even IPOs. And the story needs to be clear and as simple as possible. And if you can tell this in 10 minutes, you might have a chance.
Yeah. And you mentioned milestones there, and I wanted to come on to the subject of milestones because people often say, like investors, they want to know what the milestones are and how you're going to achieve them and when you're going to achieve them. And Thomas, as a private fusion company, how do you tackle the communication of milestones? Like, how do you kind of balance between like the excitement and maybe like overhyping or overpromising? Like, how do you tackle that?
Communication is always a tough thing because we can communicate, but we don't know who's going to read it.
Yeah.
But a good thing for us is we are part of the DOE program, so we have milestones that we had to get the milestone to deliver milestones to get our funding. To get the reimbursements, that's one piece.
You mean the US
private program? So we have the same in Germany with BMBF programs where we have clear milestones that we have to deliver, and that's pretty large amounts of capital that we have raised from public funds. But that forces us to deliver our milestones, otherwise we don't get the money. And I think it helped us a lot to structure ourselves. To structure a company in a way that we are really focused on delivering these milestones. And that again helps to tell the story better. And then it's about communication is pretty much about being around for a longer time. So if you are on panels like this or other panels, if you have some are good marketing, people see you a lot, and then they start picking it up. And if you get stronger partnerships, like we just announced a few of them in the last few weeks, this helps. So we were a lot in the press in the last few weeks, but success helps, definitely.
Yeah. And Charles, when you're thinking about there are different approaches on the way to fusion. Inertial fusion is one. You've got magnetic fusion. You've got field reverse configurations. You've got lots of different approaches. So how can mainstream institutional investors decide which fusion pathways represent the right investment or the right way to go? How are they going to choose between this plethora of different approaches?
Yeah, it's really tough. I would say that the number of large institutional investors I've engaged with on fusion over the last couple of years who are at first interested, but then eventually their eyes glaze over because they just get confused and lost, is a problem, right? I think the biggest, if I was to be so bold, say the biggest sort of challenge I would say for the fusion space today is there isn't a group of well-resourced, well-funded, independent people the institutional investors can call on, right? If I want to invest in a new LFP battery technology, I know there are 10 or 15 groups who I can pick up the phone and speak to who are standalone, independent. They can run in 20 different parallel directions. The same holds for different sustainable aviation fuel technologies. And look, appreciate fusion is slightly earlier in the journey, but that lack of sort of conduit or interpreter for the institutional investor community is a real challenge at the moment. Bridging that gap would be pretty beneficial, I would suggest. So that is a bit of a challenge at the moment, I would say.
There's also this, triple product idea, which is very helpful to communicating project progress that a lot of people have talked about, but not a whole lot of investment decisions in our world have a nice little metric that you can just track over time and be like, oh, that one's doing pretty well. And so that's helpful. And I think, being able to, going back to being a dumb investor, those are very having those distilled down metrics, even though we all know it's not everything. There's capital intensity, there's kind of time to deployment, there's a whole bunch of other things that go into it. But without a meaningful Q milestone in the next 3 to 5 years, you're going to start to lose a lot of investor interest. Investors are going to start to flock away.
Do you think that Q milestone is the one that's going to attract the broader investment to come in when it's hit?
Yeah, absolutely. Yeah. We need a whole bunch of things, but I can guarantee you assembling a great organization or doing a bunch of balance of system work isn't going to do it. It's going to be hitting a Q greater than 1, greater than 10. That's going to galvanize a whole bunch of interest for a bunch of people who are hearing about fusion. They're hearing about this AI energy thing. And then all of a sudden, bam, we get hit with a Q greater than something moment. And a whole bunch of new money comes into the space to help fund us through to the next leg. There's optimism there too, right? Like even in the venture land, where we're like typically high risk, where we've been investing before, this last year we invested at venture broadly, globally invested about 450 billion. And the peak in 2021 was about 700 billion. And so if you're thinking about what a company needs between now, like demo project to first of commercial, like let's just call it $5 billion for round numbers over 5 years for another round number, it's $1 billion a year for one company. And there's something like $500 billion in venture, just venture dollars. Once you get over Q greater than 1, you're unlocking new sources of capital. Sovereign wealth funds manage something like $10 trillion in assets. You take like one tiny little fraction of that. And like, we're not talking big numbers here when you're looking at the overall global market. And so if you can start to demonstrate things that milestones, important milestones that will get capital off the sidelines, you really don't need to push the capital all that much when the ocean is that big to really get some movement going.
Well,
yeah, milestones, like I am very pleased that the company I've invested in, General Fusion, has such clear milestones right now. So that's important. But the narrative and having a group of people you can go to have them explain to you what is this all about. But I think that also a very important thing that I would like to see changed, and maybe you guys here can help with that, and that is more involvement of the biggest players in the energy industry. I mean, yeah, the oil and gas players are dabbling a little bit, but what does it mean for an institutional investors that these very big players who are raking billions every week out of the energy industry, that they hardly play? I mean, that is like, we need a narrative where we say, gee, we appreciate what you're doing and what you have been doing, but 20, 30 years from now, do you still want to be not an oil and gas company, but an energy company, a top energy company? And how? So it's not just the institutional investors. How can the energy players who understand how this industry works, how can we bring them more to the table? Yeah, E&I has invested a little bit in Shell, but it is all dabbling. It is like throwing a little bit against the wall and see and try to see what sticks. But we need a real attempt by the energy companies to be part of this very important industry.
Miles, do you have an idea of what would bring them in?
I couldn't agree more. And yes, the amount needed in terms of the grand schemes of things is not a lot, but actually you want these guys to really have some skin in the game, right? Because then they are fully engaged. You don't want them sort of peeling off 0.1% of sort of their allocation and this sort of sits on the side and they come back to it and pay attention to it once every few years. You want them to have a leg at risk. You want them to really be sort of engaged on this. And exactly to your point, beyond the institutional investors, it is the large corporates, it is the large energy majors, it is the utilities. These guys, they have the balance sheets, they have the know-how, they understand the energy system, they understand the power system. These are the guys who you want engaged from a capital perspective, but from a mind share perspective as well. Bringing those guys off the sideline is really what's going to be key.
Yeah, yes, and to that, and just that it's on the fusion industry to prove that those guys should be involved, because there's money for good projects everywhere. Big energy is looking for their next thing. They just we've done the whole boy who's cried wolf thing with fusion since the 60s. And so a lot of the people who aren't paying attention aren't seeing this progress that's happening. And so I'm excited in that I think that we're at this kind of inflection point where that's going to happen soon. But I do think it's not like we can't just say they have to get involved before we're ready to show them that they're ready, that they're mature enough to get.
Yeah, but we need to develop that new narrative that I was indicating, and we need, as a fusion industry, we need to satisfy ourselves with the fact that this will cost a lot. I mean, I always say in whatever investment I have done, if you invest M into the technology, you're going to invest M square into marketing it, because, I mean, that is really a big part of the puzzle here.
And so let's just go back to the teams discussion earlier on, and like readying the teams for this kind of engagement as well. Do you think it comes back to like you said something about the visionary? Are the fusion teams ready for the realities of the energy market?
Well, the energy market is a low-cost market. Cost is king. That's a whole different animal than the very enthusiastic CEO of a new fusion company. I mean, a utility company, oil and gas companies hardly want to get involved with utility companies because the returns are so low. It is low cost. And so how do the lead companies in this space, how are you going to go to that people transition, which they will have to go through? Yeah. It's a very important and it's a very unique challenge.
My hope is that the energy market is no longer like the energy market of 50 years ago. I'm hoping. I mean, we have to compete in a commodity market, but the interesting part, which is why I think a lot of investors are getting excited right now, is the value of an electron has never been higher than it is today. I think. I'm hoping because we have big tech now, and we have data centers, and we have AI that are when you put a kilowatt hour into one of those, that's the value that it creates for the user is much more than when you put that same kilowatt hour into just like a assembly line or something like that. And so the value margin on an electron is much higher now. So the willingness to pay is higher, which is good because it helps get those folks involved earlier and helps get the cycle moving. But also for certain applications where those first of a kind projects will help garner a higher willingness to pay to get projects up and running. Ultimately, steady state, it needs to compete in the commodity market to really take over large market share. But there's an exciting kind of path, I think, that has been carved out recently to help get them there.
But the value of, I hate to disappoint you, but most of the electricity in many parts of the world is regulated. So it's like there is maybe 20% that is part of where you can get a high return on your...
I'll take 20% of an $8 trillion market.
So quickly, before we come to the end of this session, and I'm going to look around and see if anybody wants to ask a question. I'm going to come to you in just a second. I wanted to just ask Thomas quickly, back on the teams thing. What are you doing at Focused Energy, or how are you thinking about readying the teams for moving forward and bringing in greater investment?
I mean, what I've been doing the last 1.5, 2 years extensively is building partnerships, building relationships with utilities, and I think how to bring them into the game is you have to understand what they need, and they need what you need to run a power plant, how you maintain a power plant, speaking about uptimes, speaking about LCOE, and then get them involved early on. And if this is a long path, so you just have not to give up. And then it's going to work out. But then it's, again, how deeply are they going to be involved is also momentum of the market, momentum of the overall market. So how much money is really allocated into fusion? Right now we are speaking about 13 billion in the last 8 years, I think, which is nothing. If you speak about what is necessary, we are speaking about hundreds of billions that we need to build out the supply chain. And I think the crucial thing right now is for many of the utilities, if they look at the supply chain, we have many constraints in the supply chain that we have to overcome, and we have to get these partners involved. And at this stage, the states can play a pivotal role. Because at any time, at least if I speak for Germany, each new energy source was heavily supported by the state. And I think that's what we have to see for fusion as well, to have the state as an underwriter for risk for building first test facilities, a prototype power plant, and being a customer as a kind of a first customer that is credible for the supply chain to start investing into the supply chain and bring up, in our case, laser capabilities, laser glass, all the large optics.
Yeah.
That is exactly what we need, and that's what we are working on.
And making it possible for you to kind of when you get there.
We are just a catalyzer in this whole thing. Yeah? We are a small piece.
Yeah, thank you. There was a question over here, please.
Thank you. I think it was already mentioned, one of the largest emerging customers for sustainable power is data centers, and large technology companies made a number of deals with SMRs providers, small modular reactors. So 2 questions. Do you see that SMRs would be a big competition for fusion? And second, do you think that large technology companies, owners, developers of data centers could be potential investors for fusion companies, for fusion projects? Thank you.
I mean, they are already today. Google has invested, Microsoft have invested into fusion technology companies. So they are already today because they see exactly the need there. Data centers today consume anywhere in the range of 500 megawatts to 1 gigawatt, a super large data center. And if you speak to really large data center players in the world, we spoke to a Japanese one who said we need energy in the range of 30 to 50 gigawatts over the next few years. Just one operator alone. And they, of course, they look into what are the technologies. So SMRs are relevant technologies, but the question is often the regulatory cost to build an SMR. Does this sustain kind of the overall cost of a data center? So I do think in some cases this will be a good solution. In other cases, you may look better for the likes of fusion and other technologies.
One additional thought here. I mean, not to rain on the AI parade, but sort of rise in power from data centers is getting a lot of attention. But if you actually look at the numbers over the last few years, it's actually things like heating, cooling, electrification of transport, electrification of industry that is driving the growth in electricity demand. So outside of sort of the data centers and that angle, there is just a huge hunger for power that needs to be met somehow in some way. And so I would say, you know, the corporates involved in sort of AI, et cetera, great, but focusing solely on them is sort of missing the forest from the trees, or the trees from the forest.
Thank you.
Can I make one short remark in this regard? Like on SMRs, like the company I'm involved with, General Fusion, they have built that demo plant at the end of the runway of Vancouver Airport, in the middle of a metropolitan area. The end of the runway. You would never get a permission to build an SMR at the same spot.
Right, there's one question at the very back, please. Right at the back. Outside of the chairs. The very back. Thanks.
Hi, thank you. I represent a different segment, if you will. We are a CCUS, microalgae-based CCUS company. We would need power to the tune of 200 to 250 megawatts to abate 1 million tons of emissions per year if you were to deploy for, say, industrial emitters. So when is fusion going to be ready for it? And will it be available at a competitive price, not cost? Because I hear LCOE, I am more interested in a better price to keep our OPEX down. So those are my questions. Thank you.
When will it be ready and will it be a competitive price? These are like the biggest questions, and we've just got 2 minutes. So.
CCUS definitely won't be the first market. But, you know, we've been doing some more extensive techno-economic analysis on the fusion industry broadly. And because I think this is a really big open question that a lot of investors have. Well, there's multiple kinds of investors. There's all sorts of private investors, but there's also public investors, which are policymakers. And both people who are deploying dollars have a lack of understanding of like where is fusion going to lie at a kind of first of a kind, kind of second to fifth of a kind, and through nth of a kind, and where will it be competitive? And so the work that we've been doing indicates that there's like a pretty good and exciting range that it fits in, kind of in the like $80 to $120 megawatt hour range, depending on the assumptions you use and what technology type. But we need more work and more robust work to do that. I think actually a really big, important part of accessing more public dollars and private dollars will be to Charles's point around getting more reputable third parties into this race, is helping folks, helping people other than companies do techno-economic analyses to prove the validity of fusion, so that it's not just industry insiders being like, it's going to be great, I promise. Someone else can go in and validate it.
Yeah, getting the independent validation going. Right, we've got like 1 minute left. I really wanted to ask a question about like just action steps. Like, what needs to be done and by whom to to bring in the institutional investors. Can we wrap that up? Like, it's not that easy, is it? But any final thoughts in the last minute of where should we start? Where should we start? What needs to be done and by whom? Who'd like to?
So maybe I'll kick off. I would say the two things that sort of we hear the most from sort of the big tickets that could come into the space are, what does the space need the money for? You know, I touched on it before. People understand that today in SAFs, the money is going to be used for sort of a refinery. People understand in CDR, the money is going to be used for MRV. It's not clear 100% across all the different types of fusion. What exactly is the space looking for the money for? Is it to, you know, is it more R&D? Is it to build a plant? I think clarity on that would be sort of super helpful. And then not to beat a sort of a flog a dead horse, but it is that, who can I go to provide that independent assessment and that independent linkage between these milestones and what me as an investor care about, right? That is sort of a bridge which probably needs to be built at the moment.
Yeah. Probably a good place to start. Thank you for providing the action steps for us, Charles. I'd like to thank the panelists very much for their expertise and their perspectives. Thank you very much. And I will hand back over to Oliver Morton. Thank you.
Thank you, Melanie.
Thank you.